the market is heading towards complete collapse. And that's probably something you're hearing a lot over on YouTube from a lot of people. I know this morning I was looking through some videos just to see, hey, how are people talking about this? And do they actually know what they're talking about? Because a lot of the things we're seeing from what we've been paying attention to, we have gotten a lot of this very, very right. And this date right here is one I wanted to focus on because I just went this morning and I typed stock market into YouTube, and the first video that ends up popping up is Matt Kors saying why the stock market crash is going to get worse. January 12th, that was 5 days ago. So if we go back on these charts real quick and look back about 5 days, probably that upload date, right? January 10th to January 12th there. So January 12th right in here, he actually posted that the day of this low where we were calling out some signals that were flashing in these areas. So what I'm trying to get at in the beginning of this video here, before we get into that technical analysis, we're going to go through a bunch of stocks today on bigger time frames. But I just really wanted to talk about the fact that the stuff you are hearing, some people might even be bringing up things that make total sense, right? Like banks and bank problems or the debt ceiling and things like that. All kinds of things like that do make sense. But what matters with the stock market is, does it make people actually sell, or are more people going to be buying than selling? Because if more people are going to be buying than selling and they're ignoring all of those things, that happens all the time in stocks. And that's why we pay attention to momentum. So thank you so much for clicking on this video. And it looks like from here, where Matt Kors and many, many others saying the crash is about to get a lot worse, we were kind of saying the opposite. We said it could get worse, but we were saying the opposite. And the important thing to know is the stock market overall is just buying and selling. And even if there are bad things happening down here, if more people are willing to buy than sell, then the stock market can head in the upward direction. And now you might be convincing yourself, hey, this has to see some kind of sudden drop right when things look a little bit more bullish. So let's get into it. Now, I know that was kind of a little tangent, but I really wanted to do that because I think as I was early on looking for good info, I was always looking at those types of videos and just going, hey, they keep saying bad thing after bad thing after bad thing for potentially, if you look at a lot of these accounts for like years and years, what we like to do is point out the bad thing and then say, but how are investors, how are traders going to react? And that's why we were paying attention to this area in here. Now, we will be breaking this down for a brief moment, why we were overall bullish in this area while most people were bearish. We were aware of the risk. But I really just wanted to show this very, very briefly for anyone that's new out there and wants to get to learning this weekend, because the course sale is currently on a 90% discount, and that's going to go away pretty soon. So we're going to put that up at the bottom of the screen just for a little bit here. You have about 13 days left, and you can learn how we kind of caught these type of moves in the market for just $100 right now down in the description. So we saw a 30-minute divergence here. We took a bullish play. We saw a weekly expected move tagged here. We took profit. We saw that drop down. A little bit more dramatic, right? A little dramatic there. But then we set up another divergence point. We said, okay, this could be a potential bottom. But then we headed up to that weekly expected move very, very quickly. And you guys know I like to take profit at those weekly expected moves, mitigating most of my risk while also holding on to some runners in case that data we got around this area was actually good and could send us through with the divergences at the lows. It ended up being bad news. So that meant, I have to get out of my long positions. The good thing is I took so much profit in here that this did not go wrong for me at all. And that's fantastic. We really were doing things really, really well as far as risk goes, and that's something you always have to have in your mind as a trader. The risk of this area is a pullback. So we want to take some profit, and then we can put that money back in if it turns up. It turns down, so we say, there's no reason to be long now in this area. Then we drop down again. We actually still hold the divergence point from the first one, and then we had some other stocks giving us some great signals saying, hey, they might base out here. And before this even happened, we said, wouldn't this be nice if you react to this level and you create a little head and shoulders? We said that down in these areas, and then we created that right shoulder, and that's what first started the gap up. So this is fantastic. And what were we always waiting for? And this is what's going to bring us to the daily chart. The daily chart to cross up and get to positive territory. So are we fully out of the woods yet? No, you're not. But you do not see many signals that are saying like, oh yeah, this is a complete fake out and we're just going to tank through the floor. The only thing that I would bring to your attention at the beginning of this video that could be signaling that some people are a little bit weary of this type of move, and why you still want to pay attention to risk, right? We still took profit. We ended outside of a weekly expected move. That's a great place to take profit and maybe leave some runners. but just in case there is it's more likely to see a pullback. But I just wanted to show you the dollar. I think the dollar is the only thing on Friday that you could really point to and say, that's kind of looking like, hey, this could be the start of a trap. But we do see times where the dollar increases and the stock market increases at the same time for a few days. So we just got to pay attention to what's going to happen here. But for the most part, this daily chart curling up does lean you more towards, hey, if we are going to see a rapid downfall from here, that most likely would be Black Swan. And there's really no signal, no way to really catch that. And most of the time before Black Swans, you still see sell signals. So I'm very interested if we would just drop from here. And all these YouTubers are saying the crash is about to get worse or right. When you're starting to break through resistance, you're starting to test this high, you're starting to curl up, maybe even into positive territory, and you're just pointing directly towards a monthly expected move at 611.03. This is our 68% zone, right? 68% zone for the month of January. And we're pointing right in that direction as this MACD crosses. So that's what I'd mainly be reading into. And at this moment, any kind of pullbacks would most likely be able to hold up as long as we're able to hold, I would say, above, I want to say 590. If we see some kind of move like this to go fill this gap real quickly, okay, we'd want to see a big wick, but 590 will be an important level. So what we're paying attention to now is how do we treat this going forward? Well, if we see some kind of squeeze, we showed you guys the put call ratios going a month out. It's almost at 7.0. That means for every one person in calls, there are 7 people shorting in mid-February. And that is something we have to be aware of. They could be right. That bearish sentiment could be right. But if they are wrong, and right now the stock market is not moving in that direction for them, they could start to lose a lot of money. And if this just continues to go to the upside, well, then those people that have short positions down in these areas for February could actually be very, very beat up and end up selling those short positions and flipping the script. And then we could see some kind of squeeze. So I wanted you to be aware of that. I'm just going to flash over to the Qs. The Qs are a little bit different, but I know this is a red bar. I know you see a red bar there, but look at the buying pressure that came in off of the 5. What were we looking for on Friday? That test of the 5 possibly happening. You're pretty much right on it at that moment, and you're seeing that wick up to the high here. Now, does this mean that you're out of the woods yet? Well, we're going to go into the shorter time frames on Sunday, so make sure you're subscribed because we're going to talk about the signals in here and update you with new weekly expected moves. Wasn't the weekly expected move fantastic for your Friday close? And even on the SPY at the beginning of the week, we said this is a type of week where you can end outside of the weekly expected move. We really did well this week, so I hope you guys were able to benefit from it. I just hope this information is helpful. If you find it a little bit confusing, that's why the course is there. But also, if you don't want to spend the money on a course, hey, I get it. Come to the live show and make sure to ask questions. See if the course is the right fit for you. We're going to take that off for now and just say, okay, but the difference here for the Qs is you have gotten that signal to go up above that center line for the RSI, and then you have not had the crossing of the MACD. Now, this is a lagging indicator, but this bar right here and this bar right here are both positive bars above the 9 and the 5, which means we are very likely to see a continued upside move, and that's where we're targeting our monthly expected move, 540.57. So that means by the end of January, we could end up tagging or going past 540.57 if we see some bullishness, I would say, after the inauguration. I'm not going to read into the inauguration super hard. I'm just going to go, hey, what do signals look like? They look good. That's what I trade based off of. Because if I trade based off of the bad things that everyone is saying all the time, well, then I thought that this was some kind of crap. And you guys know that we were kind of the opposite the whole time. We said, this is very fishy. This looks like bear market behavior. And that's why it's really ripping people apart. And that's why the course will really help you understand bear market behavior very well. It will help you understand weekly expected moves, which we had down in these areas before this pop. It'll even help you understand when to take possible profit as we hit an upside weekly expected move. And there was 3 great trade setups. And I want you to notice one thing. I did not play these downturns. I did not short the downturns. I could have, but I didn't see the best setups for the downturn. These were just big moves down for the most part. So the reason that I'm overall still just taking bullish plays is because this daily never went deep enough into negative territory to really convince me like, yeah, shorting is going to be really, really easy. It can be, right? These probably were decent plays, but I just felt that the bullishness was what I like to do. And the trend is still, if this curls up, where is it? Positive territory. So if that's able to see any kind of green next week, you're going to be in positive territory. And therefore, I like to take bullish trades when a market is mostly bullish, at least bet bet bigger money on that. And then if I want to bet on some kind of crash, once I actually have crash signals, that is more a time where I'll actually buy maybe UVXY or something like that. I might buy volatility or buy SQQQ, right? I'm not necessarily doing an option play there. So I just wanted to discuss that for a brief moment, but the key thing you're looking for next week is that daily chart to be able to cross up for the Qs. That would really help you out. We can go look at the other indices, and this is why I also was not very bearish. We're going to go over this in maybe the shorter time frames on Sunday, maybe in a separate video for Patreon. But the behavior from IWM actually has been pretty good. Now we can see this little line across here if we want to see some kind of dip down, but for the most part, you're curled up with divergence on the daily scale. So I think we could see this thing end up being positive right away in the week. We see DIA giving the same thing, divergence down on the RSI, curled up. Can it go positive? That will be a big deal, or is it a retest? So we will be paying attention to it. Things are really coming in handy for the indices at this moment. So let's go look at a few individual stocks and see what they are saying, because a lot of the time, if you're looking at the SPY and the Qs, it is very good to go into those individual stocks and see what kind of things they are doing to say, hey, can more positivity come from these overall moves? So let's go into those. First one I'm going to point out is Apple, and Apple is the lackluster one. Remember how we were talking about Apple? I thought there were better setups out there, and even though I tried to play Apple for a moment at that weekly expected move, that's right, this is a monthly expected move, this is a weekly expected move, and you close back almost, I think you're right within it. So very interesting stuff, but we see that that daily is close enough that if it just crossed up, if you see like a day or two of positivity, you might be taking out this level and heading up towards 250. So we're paying attention to this because we didn't necessarily have the best topping signals, just a small divergence on the RSI. And therefore we could see a lower high out of this. We could see a sporadic move and end up going up over time. So we'll pay attention to Apple because the shorter timeframes will be important. Make sure you're subscribed for that so we can go into the shorter timeframes because they look pretty damn good actually for Apple. Even with this awful day, we've talked about it. This is a terrible day. You want to make sure things are confirming down here. And I think to this moment, they still haven't confirmed. We'll go into those shorter time frames. But Apple's a big thing right now. If Apple could start to participate in this market, I don't think there's anything really holding it back at this point. And you're going to end up seeing those monthly expected moves for those indices tagged. This was the more complicated one, right? What was another one that was more complicated that we weren't necessarily leaning towards taking a trade with? There were just better trade setups out there like Amazon. Like SOFI. I mean, SOFI was a great little trade setup. Well, something like Amazon or something like Tesla actually does look now a little bit better than Apple. Look at that. All you're looking for in these big moves. You know, everyone asking me, should I buy Tesla? Should I buy Tesla? Should I buy Tesla? Look, I'm not going to tell you what to do, but I'm going to tell you bad decisions and good decisions. A bad decision is you see a massive run up like this after a breakout moment, and you don't think that this is good here. You think that it's good here. You got to change your thinking a little bit there, okay? Because we were talking about the fact that in these type of areas, even in these type of areas, we're sitting there being patient, waiting for the pullback. This could be the pullback right now. And I really want you to see the higher low that you have set up here. We're going to go over that in the shorter time frames as well for Tesla. We're going to really look at this thing because it's starting to break through. If it can break through cleanly, we got a wick there. Maybe it needs to pull back at some point, but we're going to go into the shorter time frames to check this out. But look at that daily. If that daily just curls up, the RSI is already doing it. If the MACD can actually curl up into positive territory, what's the most likely thing to happen? We're going to test this high and go make a new one. So that's why I pointed out at the beginning of this video that you might still see people saying stock market crash, stock market crash, stock market crash, where next week it's more like a small pullback is very likely. And if we actually did experience a crash, it would be black swan and we would have almost no signals for it. The only thing we would have is, hey, the dollar increased a tiny bit on Friday while the market actually went up, which could be some kind of rigged behavior because people are extremely in calls on the PCC. But when you look out, when you really look out in the numbers a month away, people are very, very bearish. And these moves going up over the past few days have not been good for those trades. So if they close those positions, we can see a squeeze. And Tesla looks like it's really geared up for its next move higher. Amazon, we were just strictly saying for Amazon, this looks like the better opportunity than Apple. And Tesla's doing good stuff, but it had to make the higher low. So until it made that higher low, a little bit complex. It was able to make the higher low and you go, okay, now it's a little less complex. And we're just saying, okay, can we hold on to those things and watch these dailies cross up? We noticed that Amazon's already doing it on the RSI. The RSI is a little bit quicker than the MACD at this point, but the price action is telling you this is good, this is good. We're running our head get into the top of, I would say, the flagging that is going on here. You are overall just in a bull flag. Like, really zoom out on this and tell me that this is super bearish. It's not. Like, this had more argument to say maybe that's a little bit bearish than there. This had more of an argument. This had more of an argument, and that argument ended up being pretty true. But this is structured. This is not bad by any means. It doesn't mean it can't get bad, and we're going to be aware of that. But if you end up seeing positivity and you just do that, you're going to be crossing up on this MACD. You're going to be testing the high, going to make a new one. So hopefully you're joining Patreon so you have a weekly expected move for next week if you have a trade with Amazon. That's all I'm saying. I mean, having that info can really help you out as far as taking profit. I know people ask that all the time. Hey, where should I take profit? Should I take profit? Should I take profit? You guys know I just use a data line. I use a line in the sand that is based on the options data. That would be the weekly expected moves. That's what we put out on Patreon. You can literally get a perfect profit taking level every single week for every single stock that we cover every single week for $7 a month. Like, that is fantastic. You'll really have way less questions of when to take profit once you get those weekly expected moves, and you'll probably have way less questions of when the setup is really good once you understand weekly expected moves, because Amazon was doing that a lot of the time in these areas, hitting weekly expected moves, seeing big rips. So that's what we pay attention to on this channel. But the big thing for Amazon is just this needs to curl up into positive territory. We've been leaning towards that for a long time as the reversal signals were not very good, right? We don't see divergence on the RSI. We do not see divergence on the MACD. And we're waiting for them to be at the same time. It's not to say that you could be in one last push and then that ends up being a little bit bad. So we'll be paying attention to it going forward if we make daily divergences and things like that, because that's more when we want to be paying attention, when we get daily divergences closer to the center line, not when we're just seeing a pullback with a flag on the daily chart, giving you a bunch of 2-hour divergences that we're going to show you on Sunday that most likely will end up curling up the daily chart. We said that over here. We said the risk here. We said it again right here. Amazon is setting up a great signal, and that could curl up the daily chart. And look what has happened ever since. It looks fantastic. I'm just trying to really say to you guys, there are bad things looming out there, but the big thing in the market is, do those bad things make people sell, or do the bad things get ignored and people just buy stocks? Because that is something that happens all the time. And then you go to new all-time highs while these people keep telling you there is some kind of stock market crash going on right now. It's kind of weird to be still posting stock market crash when this comes up. It's kind of weird to be still saying stock market crash when you make a bunch of 2-hour divergence. If those things change, we'll change. But right now, this is looking like a new all-time high for Amazon. And then you look over at something like Nvidia, and we're right back in that area, right? We keep gravitating to this area multiple times. We called Nvidia great here, and guess what? There was a weekly expected move here. Like, if you don't think weekly expected moves can help you out, how many people bought Nvidia up at the highs instead of saying, hey, the trade is good down here, this goes up to a weekly expected move, hey, the options market might be telling me something here, they might be telling me something here, and then boom, Nvidia just drops. This is why we look at weekly expected moves. They really help us out. And look at that perfect take profit. It was great for Nvidia. Now, there is a couple things here with Nvidia. First of all, you want positivity. We need this daily MACD to curl back up into positive territory, because as of now, you have the potential that this could be a divergence point and this could be really, really bad. So what you want to pay attention to is if that gets rid of it, it needs to curl up on the daily scale. You need to take out this high for Nvidia. If Nvidia and Apple can start to participate, especially Apple at this point, you could see some rips in this market. So we'll be paying attention. Now, this has not crossed up yet. So we have to be aware that the momentum is still down, and that could be some kind of ABC move like we were talking about. So Nvidia is one that is holding pretty well, but not necessarily seeing that rip up that it really needs to see. It keeps getting these selling days in it, which is kind of a problem for it. So Nvidia would be one that you would pay attention to and say, hey, there might be a little bit of weakness going on in the early part of the week. So if I have calls, I need to have a plan going into Tuesday of this week, because we are off on Monday. But yeah, the main thing here is just I need to curl up into positive territory, and we're looking pretty good. And the structure of the market, the structure of Amazon, even the structure of Apple at the lows, if that can curl up, and that looks horrible right now, the structure of Tesla, all of these things look like they just want to make a daily trend move to the upside. AMD, I know a lot of people talking about AMD, a lot of people asking questions about AMD. Once again, that same kind of thing as Nvidia, not the best buying pressure, but the thing about AMD is you have divergence at the lows. You have divergence not only on the MACD, but on the RSI at the same time. That is a great signal. Now, you can always go down for the triple dip, right? We can always go down for the triple dip, so we're aware of that. That's why we know how to manage risk. That's why we know how to manage our trades in the course. That's 90% off. You can get it for $100 right now to learn how to trade something like this, some kind of signal like this, and then you can know how to manage your risk and then be able to maybe get back in if that turns back up. Or maybe this just keeps going right now because you've already confirmed divergence on the MACD and RSI at the same time. What does that mean? That means that you could see a weekly move higher for something like AMD, and you could end up back up towards 140 in the next couple of weeks. So that's why we pay attention to these things, because the signals are going to tell us a lot more about how people are actually positioning their money, and that is much more important with the stock market. But I wanted to point out that AMD, we put out weekly expected moves for it, and if you have a weekly expected move, maybe there's a bunch of volatility and it's way up here towards our zone, and you see a rapid move like that, and then you're asking me, hey, should I buy this now? Now it looks good. You didn't buy it when there was an opportunity. You bought it when everyone else is already thinking about selling it, and now you're FOMOing. And we try to stay away from that, so we can really help you out in this, and that's what we're trying to do on this channel, is just, you know, talk about these things, tell you about how to manage in case there's risk. There is always risk. This is not a 100% thing, right? We want to be paying attention to potential downside, but notice that we have confirmed a reversal signal for AMD. The tricky one right now, I think, is Meta. But if we really look at Meta, we've held the lows, we've made almost a higher low, and we technically do have some form of consolidation here, maybe in the form of a triangle. Maybe people are saying cup and handle. The main thing I want to see is a positive move from the daily that's able to hold above this level right here of about 632.33. I think that would be good. You need to hold above these highs. Maybe we get some kind of retest and end up going higher. But remember, Meta was one that we were really paying attention to. Hey, can it give us that divergence point that really tells us, like, hey, there is something bad that's happening in the market and we're actually just going to see a trap. So we'll look for that over the next few days. But one thing you need for Meta is the daily chart to curl up. It's still in positive territory. You just wicked up above the 5 again. So we're just waiting to see some more price action. Do I think Meta is like the easiest play in the world from this standpoint forward? Not necessarily, but you will get a weekly expected move, right? If you're part of Patreon, you'll get a weekly expected move. And if this curls up one day and you see a bar like this, okay, it's very likely that you're pointing right towards that weekly expected move, and that's what we're going to pay attention to for Meta. The other thing that had us bullish was Microsoft. Microsoft, again, giving us those great little 30-minute divergence down here, 2-hour divergence across, and you can kind of see that on your RSI for the MACD. You can see that point down here that is higher than the other. That is the 2-hour divergence that we're going to point out in tomorrow's video, so make sure you're subscribed. And we did point out what? A reaction to the top of our zone would be fantastic. Maybe backing off from that area would be good as well. But if this just wants to take over and this is all done, you know, it's looking a little bit more flat than others, but still up 1%. So if this is able to curl up and you're able to break through here, you might need a retest or something like that intraday, but this would say, hey, we can head to the upside. Now, we are going to be aware of lower highs for something like Microsoft, but I want you to imagine for a second that it doesn't see a lower high. I want you to imagine that for a second, because that would mean maybe you see 1, 2, 3, 4, 5 days of positivity without a pullback. I'm kind of talking about the squeeze scenario here. Microsoft is something that has built a pretty strong base now with a 30-minute and a 2-hour at the same time. And so that daily's curling up and you didn't have reversal signals at the highs. So I would not be sleeping on the fact that, hey, yeah, it's in negative territory. Got to be aware of a lower high, but I'd really be paying attention if you start to take out these levels, you can go higher. So we'll be looking for what's going on in Microsoft and really paying attention to this upward move and see if there are signals that tell us, hey, this move could fail, because we're not necessarily seeing that on the shorter time frames at this moment. AMC had some buying pressure come in. It is back above the 5. That is a good sign, but you're curled down on the daily MACD, and you've really gotten rid of that divergence point that really said, hey, we could see a positive move here. Hey, it turns down. And the thing that I would be watching if I was looking at AMC is I'd be watching what GME is able to do, right? They don't move in tandem all the time, but when you see key flushes like this, it's usually at the same time. So you want to look for those reversal signals for GME. AMC needed to break through 425 this week to see something crazy to the upside. We're going to update that level on Sunday for you. That is the level you need to break through to really start some squeezing. And this is really where the battle truly begins for stocks like AMC and GME. Now, GME, and the reason we're not lingering on AMC too much is because the signals do not look good there. I'm not someone who's going to lie to you and tell you that tomorrow's the day every single day, like some guy that's not really a good trader. I mean, that's just the truth. But GME is a great thing to break down. We're going to go into this in the shorter time frames to show you the actual sell signal. I thought about shorting GME because this was such a good sell signal, but I just hate shorting the thing, right? I want it to go up, so I'm just holding on to the stock, right? And then I just get rid of my option plays when I see something like that. This bar right here, we talked about the divergence at that bar. We talked about the fact that this is a positive bar above the 9 and the 5. That is not a good confirmation. But I told you what would be a good confirmation is if we go make a 2-hour divergence and we cross down and you see a red bar below the 9 and the 5-day moving average. What did we get? We got a red bar below the 9 and the 5-day moving average. And look what happened the next day. Boom. And what did we say? 28.35 is what I'm looking at. And guess what? I didn't think we'd end up there in one day. We freaking did. So the thing about this isn't to say, oh, we're always right. Oh, we're always this. This easily could have just turned right back up, but we're paying attention to the risk, and you need to start to learn these things because GME is giving you the exact same things as other stocks. It's giving you pullbacks on the daily scale that curl up into positive territory, and then you see positivity. Then you see a 2-hour reversal signal, which says the daily can cross down, while the daily has a reversal signal as well. And then that has a bad confirmation, not even a confirmation because of the bar, but a good confirmation here. And if you were paying attention, boom, you were not hurt by this, right? You were not hurt by this. As far as an option play goes, if this happens, what's my rule? Am I taking calls on this? If this ever, if this is going to curl down, especially with divergence, one of my rules is if a daily MACD curls down, I'm never taking calls. And that's just one of my rules. And that's something we can pay attention to. GME, 36.35 was the level to get through for this week. Most likely that level will change, so we will be giving you the updated level here on YouTube completely for free. If you want to see something crazy, you got to break through these purple lines, and that line does change every single week, so we will be giving that out for completely free on Sunday. It's a great level to pay attention to, and we've used it a lot to take profit, right? We've actually used it to take profit sometimes on option plays because we tag it actually pretty often for GME, not necessarily for AMC. Something that could be something to talk about here, this right here. If you have people right now that are telling you, oh yeah, now it's going to skyrocket, now it's going to, there is no basing out signals from GME. If it does skyrocket, hey, I hope it does. I hope it does. I hope it's random. I hope it does it. But that's exactly what it would be. It would be random. This in really no way is a strong base. And we're going to show you that in the shorter time frames for Sunday. The time where you really want to be getting in is when you have great signals. And we had great signals right here. We saw the retest, and then that was all great. That was all good to go. That's the opportunity. This is a sell signal, and it's just as simple as that. You can trade this thing based on momentum because people are moving their money, and big money moved. So you want to be aware of sell signals when big money's about to do something a little bit more dramatic. Another trade setup that we were talking about was SOFI. Now, we're going to maybe even go into the shorter time frame. We might do this during the live show. We don't talk about SOFI too often, but we noticed that SOFI, this is when you pay attention. People say, when should I pay attention for possible buy? And I'm just like, well, if it's up here, don't pay attention, right? If your MACD's up here and price is up here and you just saw that, why am I even paying attention at that point? Right? There's no room. You got to have the stock make you some room. And that's exactly what happened for SOFI. And SOFI gave a great signal right here that confirmed on this day, and then you started to see the gap up. So this is one I thought about taking, but I ended up taking a lot of Amazon instead. And SOFI is actually one that is telling you, hey, the daily MACD has crossed up. So that is fantastic. Now, we do notice a few stocks that still need to cross up on those daily MACDs. So that's telling us that maybe we should be aware of pullbacks going into Tuesday. But SOFI is saying, hey, I've got a great move. Maybe I want to go retest the 5. But if people are really, really bearish on SOFI, I haven't looked at the options data for SOFI. We do give out weekly expected moves for this stock. But I just want you to be aware that we saw the 2-hour signal down here, and it is proving itself right now, which means you have a great chance to test these highs in here or go make a new one. And something that would be great for this would be to curl down. Now, why would that be a great thing to curl down and get some retests in here of these areas? Well, because then you actually do see the line in the sand, you see the structure that could build, and this would be fantastic for SOFI. So I would love a little pullback in the early part of this week. I think that would be fantastic, but I'd also love a squeeze. I'm happy either way. Towards the end of the video, we like to go over volatility, dollar, the yields, and all those things, and just tell you about some things that could be a little bit risky. You never want to be like, oh, we saw all these things, they're all playing out, so I have to be right. That is something that can really hurt you, right? Always give yourself, if you're really, really bullish now, maybe you've been paying attention to this channel for a bit, you saw how we've caught these swing highs, sold, and then saw the downward move, saw the bases being built, saw that go high, hit a weekly spot. Maybe you watched all of that, and then you're coming to the point where now it's go time, and you're like, okay, everything's bullish now. I'm bullish, bullish, bullish. Give yourself that 1% chance to be wrong. That would be something very helpful. In case you are wrong, you will react. There will be a piece of you that goes, maybe I should react here. And that's enough to potentially help you out in saving some money, because half of the game is learning the right time of when to do those option plays, right? Half of the game is, when do I take profit? When do I know the trade is going wrong? And those are things that we tackle in the course down in the description. So get it while it lasts. You only have 13 days left to get it for $100 down in the description. And you have a weekend. If you have nothing going on, you can learn this weekend. Now, something key here for volatility. Well, this cross down right here, why didn't we like it? Because it was a cross down, yes, on your MACD, but it was positive still above the 200. So overall, a positive bar. Not the best thing, but not the worst, right? This is different from the GME bar, because you're below the 9 and you're below the 5, right? So we're paying attention to the fact that we have another closing now below the 200, and that means that this is very likely that we end up down towards 1212 or sub 12, right? Something like that. This is very likely as we've broken the trend. It doesn't mean we can't see little reactions up, so we'll be paying attention to the shorter time frames. And what we really want to pay attention to is, as this MACD is close to positive territory, any kind of reversal signals in here on the shorter time frames, because if those end up turning up and you turn this daily back into positive territory, this might be some kind of trap. So we'll be paying attention to that for you. But as of right now, on the daily chart, I really want you to look at volatility and tell me that this is going to cause a crash at this moment with how this daily chart looks right now. There's a high, there's a low, there's a lower high, and what's most likely to happen now? Well, you just close below the 200, so a lower low is likely. Doesn't mean we can't experience pullbacks, but I would just say that people are most likely going to buy those dips from this point forward. Talk about the 10-year yield for a second, right? Everyone getting scared of the 10-year yield. And I want you to notice when they're scared of the 10-year yield. They're not scared here when it starts to spike up dramatically. They're not scared here when it starts to spike up dramatically. They start to get scared in here. And notice that the media starts to talk about it a bunch. Everyone gets scared of it. And what happens a few days later? It comes down, and that is something that we were always aware of. And we saw divergences actually on TLT and the 10-year yield that kind of said, hey, yeah, this might actually curl down on a daily chart. And the thing about this daily chart is you have divergence here. So it is actually very likely for this to continue down. Now, it is holding up pretty well. We'll look for those little reactions, but we don't get a ton of data this week. We just get a few little things of data this week, some initial jobless claims. People might pay attention to that. But I just want you to mainly, from this portion of the video, just be able to say, this was already moving up rapidly and the stock market kept going up. It's just when they were told that it was bad, when it started to break through key levels, that's where people started to pay attention. Okay, so you have to realize that people are very bad at reacting and noticing when these things are actually going to curl up into positive territory. And we notify you guys about those things, and we say eventually this will cause some kind of drop when people react to it. But right when that drop comes, the yields most likely will come off and we have divergences at these highs. We're still always open to that going higher, though. We are not going to be just oblivious and say, yeah, this has to curl down. We're going to wait for the signal, but this is overall saying that the yields are going to back off. We'll see if they can whip back to the upside and look at maybe shorter time frames during the live video. The other thing that I would just say is more worrisome, right? The 10-year yield crossing down, not really having a good bar, just kind of having, I would say, a negative indecision day. Is a little bit different than the dollar. Now notice the dollar and the yields move in tandem a lot, right? We actually had a whole video where we just pulled up the dollar and the 10-year on a weekly chart and showed how they almost bottom at the same time and then they top at the same time. And I really want you to look at this because they're doing it right now. Now, the only worrisome thing for now, intraday, I would say at the moment, is you have confirmed divergence. You've gotten rid of that as of this moment with this bar. Now, is this just some kind of snapback move? We're going to see this drop off. That's kind of what your MACD is saying at this moment, but we have to be aware that those shorter time frames can curl up and the dollar could scale up. So we are are this week going to be paying attention to, if the market continues to squeeze, we're going to be paying attention to if the dollar is up at the same time, right? This is another moment where we point this out. We pointed this out multiple times this year, and it's really helped us out. We're going to be paying attention to this behavior this week and going on into the next week, because if this is the case, then we could be seeing some kind of massive trap. And don't ignore the fact that, you know, what really caused some selling? Well, the potential for this being an actual top was actually there. This red line is a curl up on the monthly chart in December, and that means you're probably going to go through some bad things in January of 2025. So we might see one last trap to the upside, and it means, hey, I can play this upside play. It looks like a great trade setup, but I have to be aware of how this thing could reverse down. So the main takeaway here is I just really wanted to point out the fact that you're still seeing a lot of bearish videos out there that are calling stock market crash. And I would say for the right reasons, but for all the wrong reasons according to the stock market. At the end of the day, even if people see bad things and they want to buy at a crazy rate, you can see new all-time highs. And that's exactly what this signal is telling you here. And you guys notice that we were just really controlled throughout all of this, and we saw the setups, we saw the setup, we saw the setup again, and we're benefiting from that, right? We had a lot of trades this month, which I really, really like. And I was always calling out, this is bear market behavior. So if you want to get good at trading in a bear market, you got to start to learn why these were good opportunities for little trade setups. It can make you a lot of money. And that's exactly what we did for the past month with these signals. So it's been a fantastic month so far. Let's hope it continues. Let's continue to watch what happens going forward and make sure to always be learning and be willing to say, hey, how could I be wrong? Because that is how I can really help myself or save myself from losing a potential big amount of money with a big drop, and just say, hey, I'm wrong here. That's coming down. And then if it curls back up, we can be right back in. Always thinking about risk. That is what trading like water is about. I just think it's funny to get bearish as a daily MACD curls up pretty damn close to the center line. Thank you guys so much for watching this video. I wanted to make it really extensive so that you could really see the comments that people are making on YouTube, but also see how the technicals are not adding up to that at this moment. So unless they're going to be right and there's some kind of black swan, it really looks like we're going to end up heading to all-time highs at some point by the end of January. We'll see what happens going forward, and always manage risk. Thank you guys for watching. I hope you have a great weekend. If you're dedicating yourself to learning this weekend, I still encourage you to go get yourself a nice meal, right? Make sure to fuel that brain while you're learning, and then come back on Sunday for these shorter time frames, which we'll be going into pretty extensively this week, and then give you those weekly expected moves as well on Sunday for completely free. So thank you guys so much. Have a great weekend. Peace out.